Welcome back to another week of trading, everyone. I'm Philip here from BlackBull Markets. Hope you all had a good weekend. Now, last week the markets were a fair bit uncertain. Traders weren't really sure what was going on due to NFP, and we had some Canadian news and other news as well. So people weren't quite sure what was going on. They were waiting for those releases to identify a certain trend or any sort of certain moves in the market. Now, this week the market has woken up with a bang. We saw major drops in the euro early on. Now, we do know this is partially due to the Eurozone being a bit more sensitive to what's going on between Russia and Ukraine. We also saw a massive gap up to the upside in gold. Now we'll take a look at that chart as well, and I'll take you guys through a couple of charts. Obviously the Aussie right behind me at this moment. I want to show you guys some EURUSD, EURJPY, and also want to show you guys the gold as well. Now, we've been focusing on gold for quite a while, considering it has been moved and has potentially been looking for coming back to its safe haven due to the war between Russia and Ukraine. Now, before we do dive into this video, guys, make sure to smash that like button. Also subscribe to the channel if you guys are interested in learning more about Forex and improving your Forex trading skills. Now, without further ado, let's dive into the markets and see what we have. So obviously, first of all, like I said, AUDUSD, this is the hourly time frame. We're currently seeing it, the Aussie being stuck roughly just below that 0.74160 mark. Again, round numbers playing out fairly nicely. We had this kind of channel to the upside. We saw a nice final push, trying to reach that channel. Now we have to wait for a bit of rejection, but personally I will not be looking for moves against this channel. I've got a bit of an issue looking for moves against channels. Now, particularly the reason, I'll quickly show you guys why. Let's say, for example, we did take an entry, stop loss, let's say, for example, above, or the area we want to exit the market above that zone. Now, if the market was to continue on with the technical analysis, continue on this channel, we'll eventually get stopped out. The other issue is, the longer we stay in this channel, the smaller our profit target becomes, right? So it's a bit of an issue. Now, obviously, risk-reward ratio is having a much larger risk compared to a reward is not always the greatest thing to look at as a trader. Now, I like to trade with a channel, which is pretty much exactly the opposite of what's going to happen here, or what generally happens when you trade against a channel. So if we trade with it, looking for example, a rejection coming to the downside, the channel is continuing further higher, let's say. Now, if I do look to take an entry right over here, stop loss below here, sorry, even if the market does continue onto this channel, I will still be in profit. Even if it struggles to continue on, but it's staying inside the channel, profit will still be increasing. And obviously now, the longer we stay inside this channel, the larger our take profit targets become. So the longer we stay, the larger that target becomes. Now, that's kind of what I'll be waiting for this pair, for the Aussie dollar. I'll be waiting for a move coming back to the zone, looking for rejections. These rejections generally happen around support/resistance area, so we can use that with the channel to look for nice potential rejection zones, and then for the market to move further higher. Now, if we do break above this, obviously we're going to have to start looking for breakouts of the channel, retests on the channel, and similarly to the downside, right? If we get to move to the downside. The one issue is when we trade back into channels or any sort of pattern, really, we always have to be in mind of these current support/resistance zones that are being formed looking to the left, right? So these will always play a big effect when the market does. They could either act as rejection zones for the market to continue back up, or we could use them for zones to either take profit targets or even re-entries back to the downside, right? Now, let's have a look at the other pairs I want to look at as well. Obviously, like I said, the euro has been struggling, and you guys will certainly see the big drops we've had. So first of all, when we're looking at EURJPY, this is the hourly time frame. We saw a major drop early on this morning as the market opened up here for us here in New Zealand. We did see a bit of a pattern play out. I was really hoping to do this video before that, but we had a very nice sort of structure break right over here. This is, again, one of my favorite sort of setups. We do see a structure playing out over here. We had the break to the downside, and the markets are now looking to continue to drop further lower, right? So this is what things we tend to look for. If we do see a big drop in the market, we're not just going to enter at a random place. We're going to look for any sort of re-entry structures or any sort of things that the market will give us to look to jump back on board. This allows us to have a much tighter stop loss, a better risk-reward ratio, and just in general, a better trade. Okay, so let's have a look at quick targets. So obviously, we have to look at the other side as well. So first of all, I'll pop it over to the daily term time frame. We can see, again, not much happening here to the left. If you guys have a look, there's not much happening on further lower. So we're going to have to pop it down, or even let's try and zoom out, see if there's anything further. Still nothing. Weekly term time frame. Looks like it's taking a bit too long to load, but we're seeing this daily turn time frame. Really, there's nothing in the way, so we're going to just have to start looking at round numbers. Obviously 124.0 is going to be a major psychological zone. Even 124.1 could be a big structure for the market to get stuck on, so we're going to have to start looking at these zones for potential rejections. Obviously, if we do look on the higher term time frames, we don't get any support coming up, you know, it'd be kind of silly in my opinion to look for moves to the upside, but that can always change, right? We can always still see the market move further higher, just because, you know, the market wants to move further higher. We can't always say 100% that buyers are going to come back in. We can't always say 100% sellers are not going to come back in again, or are going to come back in again, okay? So that's kind of what we have to look at as traders. We just need to follow the market. So personally, what I'll be looking for, if we do get a rejection of the zone, we could always look for the market to come back to here, or even if we use sort of these internal structures that we had for the market to, you know, kind of maybe create a head and shoulders, and then we can look further higher for shorter term buys. And then once we do reach these resistance zones, we can again look for other rejections or breaks these areas to continue further higher. Okay, I want to show you guys EURUSD because we actually had a very similar pattern in EURUSD as well. So EURUSD, this is the hourly time frame. We had a beautiful little channel, market broke out of that channel, and then we started to push it down. So now, not sure if you guys do remember the structure we had right over here, but the market ended up coming below this and continuing further to the downside was also something we were looking at. Okay, now again, similar structure. This is the hourly time frame, EURUSD. We saw also again that nice structure over here, pattern break. The market broke out of that structure, pushed further lower, and now could potentially be looking to continue down. Now we can maybe use the EURUSD to see if we have anything on the high term time frames. Zoom it out a bit to see. You guys can see we are really, there's a lot of space. We have got some sort of resistance coming up, so that could cause the market to reject and maybe look for shorter term positions to the upside. So for example, if we are rejecting on these zones, we could easily look for, like I said, the market to, similar to EURJPY, we could look for the market to kind of come back up to these zones, or, you know, wherever this zone is, and then push up again for rejections to maybe push further back to the downside, or even break above and come back into this major zone over here. We can see it's been fairly messy, right? But it's starting to clear up. We see a couple of clean moves in here, so we could potentially be trading in between here. Swing traders, again, zone to zone are things that we're looking for. Above those, obviously, again, we're going to start looking at support and resistance zones where the market could reject again. Okay. Last pair I want to be looking at for you guys here is gold. Gold has done its job. Okay, now if you guys do remember what we were looking for this last time, or last week as well, waiting for the NFP. Now we didn't really get much clean decision making in the market, nothing really that major. We were obviously looking, if you guys do remember, we ended up taking, well, looking for positions right over here. So I'll quickly zoom in. Actually, let's pop over, I'm going to pop over that the high for you guys so we can keep that in mind of where that's sitting. So there's the high. Okay, so let's have a quick look. Zoom it in a bit. Okay, now if you guys do remember, we had this market kind of push up here. I'll see if I can get that going out so you can see a little bit more of the charts. Okay, we had this sort of structure. We had the break of this resistance. Market ended up closing above it. We've got moves to the upside, rejecting on an internal support of that initial move to the upside. Market then again rejected, pushed back down, which gave us a potential another opportunity for re-entries in the market, right? We got that very nice re-entry right over here. The market was a bit uncertain, was a bit struggling, could have played a lot with your psychology. And obviously, if you had entries over there, for example, where that candle closed, and stop losses below here, hoping to go back to these highs, which is a fairly decent risk-reward ratio trade. It's not a bad trade to take at all. Maybe you could have gotten a tighter entry, but nonetheless, we saw the market kind of come back in between profit and loss constantly until we finally started to get some momentum, and then NFP obviously happened. We can see some major whipsaw on NFP with those wicks going on, and then we had the market bump just below this high, closed actually for the week just below that high we had, if you guys remember what I marked out. And then now this morning, when the markets opened, we had a nice pop above. This is why, again, it's so important, guys, to not, potentially look at not holding trades over the weekend. Now, for me personally, if I am deep into a trade, let's say, for example, I took a buy over here, and let's say I was running deep into profit over here and the weekend closed, I'll be happy to potentially look at holding a position, over the weekend, because we could get some further pushes higher. The market could get back down, and I could get another opportunity, to continue further higher. But generally speaking, if we were taking a sell, let's have a quick look here at this example. I'll pop this back up here so we can get a bit of a better view. Let's say, for example, we know resistance this is the resistance coming up, very, very strong resistance. In fact, the 1979 or 1980 major strong resistance, psychological zone as well. Saw the market reject. Now it was very, it's not a bad thing to take a sell this position, but the weekend is here, right? So let's say, for example, we took a sell. Stop loss was maybe above the zone or just somewhere above here, and we could have actually gotten gapped out above our stop loss. Again, this is a very, very bad thing, because we essentially lose more than we're willing to risk, which is a very not so great. As traders, we want to keep our risk very small and keep it to a similar amount every time we lose, so we can control those losses and protect our capital, which is our number one job as traders. Okay. Now, let's have a look at what we can see potentially for the upcoming week for gold. Obviously, daily, weekly term time frame. Now, if you guys do remember, very, very long ago, I think it was a year or so ago. When was this? 2021. So yes, was last year. We also had December 2020 as well, which was a while back. We were actually looking sort of at these channels that gold was playing in. We then eventually got a break of it. We had to, readjust these trend lines as well. But we did eventually get a break of this channel. We saw a nice rejection on this, coming back down again. We used the internal, like I spoke about before in that previous structure. These internal support / resistance zones play very strong roles in the market, either rejections or re-entries. We got a rejection, market actually pushed back down to another support. Now keep in mind, this is the weekly time frame. So this move up here, although it looks very small on the weekly, if we look on the daily, 4 hourly, this is a fairly decent move to the upside. So we can use these to push further higher, right? So we can see the market then use that support, pushed a little bit higher, and we came back down, rejected again on the similar support market. The market actually closed on the weekly just above that, creating this beautiful big wick that came down to a support as well. Market closed above there, and we continue to stay above the support for an entire year, all the way leading up to now as well. Okay, and then we had this internal support / resistance zones we were speaking about before. We had that breakout, market then started to struggle, which was happening recently, and then again we saw the market blast past. We had that target of the initial move to the upside. You guys can see here, so there's that sort of that spike up that we were looking for. Market then gapped above starting this week, and now looking to come back again, guys, to all-time highs for gold. Gold is looking to run back to all-time highs. Now, this is a very dangerous area to play in. Reason being, because once we break past all-time highs, we are in uncharted territory, right? No support, no resistance. The market is doing its thing with no history. Okay, so we're gonna have to start looking at round numbers to manage our trades and see what we can do. But if we do reject, right, if we do reach these all-time highs again, we could look for rejections for the market to come back down. Shorter term sells, we can do very easily shorter term sells using the support / resistance zones for potential targets, or even re-entries to go back to the upside to break those all-time highs. Now remember, guys, although we do see moves coming to the downside and they do create great opportunities for sells, gold is a commodity that is always going to be used unless people stop making electronics with gold or start making jewelry out of gold. Gold is this thing or commodity that people will always need. Well, for the foreseeable future, people will need gold. So in the long run, if we look at longer term things, gold will tend to go up because it's obviously a mineral that could be getting scarcer, and it could be running out. So people are wanting gold more and more and more. And again, we're seeing gold being a safe haven. So as things get more uncertain in the world, people will pump their money back into this lovely yellow hard commodity, right? Okay, so that's kind of the news we have for this market for today. So make sure you guys stay tuned, subscribe to the channel, because we will be releasing videos every single day. So if you guys want to stay updated with the market and enhance your trading skills, like I said before, guys, smash that subscribe button as well. Leave a comment down below. We'll be happy to answer any questions. If you guys do have any requests, let us know as well. We'll be happy to do some next. Tomorrow we'll be doing WTI. We already have had a request for that, but today I wanted to focus on more recent things. But WTI we will be looking at for you guys tomorrow because we have had a request. So if you guys have any charts you want to see, let us know down below. If you guys have any questions you want to ask, again, let us know down below in the comment section. We'll be happy to answer those or happy to help you guys as much as we possibly can, guys. From us here at BlackBull Markets, as always, enjoy the week, stay tuned, trade safe.